coup.
Are we live?
Yes, we are live. I
Yeah,
see
fantastic.
some-
We have 10 participants.
Super.
We wait. Bruno, we don't see you.
Let me just put on the camera. Is that okay now?
Yeah, that's fine.
Perfect.
Philippe, tu m'entends?
Adrien, c'est nous qui t'entendons.
Ah, je me suis planté de...
Tu dois changer de...
Ouais, pardon.
For those who have joined us, the session today will be in English and translated into French through the, you just have to switch from one language to another. You just have to click on interpretation on your screen and select the language from the drop menu. Donc pour ceux qui nous ont rejoints, la session va être en anglais. Donc vous pouvez cliquer sur le bouton en bas à droite de votre écran, interprétation, et vous choisissez le canal que vous souhaitez, français ou anglais.
Tu m'entends si je parle?
Okay, so maybe we can start.
Moi, j'entends pas Anne-Sophie, en fait.
Ah. We have a technical problem.
Non, du coup, je peux pas traduire.
Yes, we hear you on the English channel, Adrien. Whereas you are supposed to be on the French one. So sorry if the translation is not perfect because it's two members of the club which are not professional translators that we provide the translation. So we will try to speak very slowly. Good evening to all of you that have joined this web conference organized by the Microfinance Paris Club. We are now quite well experienced in a web conference, but I will give you few recommendations for the smooth running of the conference. Please mute your microphone during speaker's intervention. If you have any questions, feel free to write them directly in the chat. We will answer them after the speaker's interventions. The webinar is recorded, and you will receive by email the link to access to the recording after the webinar. The session will be of 1 hour and a half, so we will finish at 8 p.m. For those who don't know yet the Microfinance Paris Club, it is an independent forum composed of people with an experience and a common interest for microfinance. We wish to share this experience and to promote exchange and debates among practitioners and stakeholders involved in the sector. We organize meetings and conferences 2 to 3 times a year through a partnership with Convergence on a wide range of subjects related to financial inclusion. It is important to mention that members of the club are participating to these events on a personal level and do not represent their organization. During the last session in December, we have had an exchange on the role of microfinance in the ecological transition. Today's conference will focus on the Lebanon multiple crises, their impact on the microfinance sector and their clients, investors' roles, and perspective for the future. We are pleased to welcome our 3 speakers of this session. Nadine Shehad, CGAP representative in the Arab world, Youssef Fawaz, CEO of Al Majmoua, Bruno Dunkel, Impulse Investment Manager, and the moderator of this session will be Sébastien Duquet, COO of Sunfunder. Sébastien, I let you introduce today's topic and our 3 speakers.
Thank you, Anne-Sophie, and thank you, Philippe, Adrien, and all the club for the organization of this workshop. We decided to focus on Lebanon, a country that resonates to a lot of European and particularly those days to discuss about the situation in the country for the microfinance sector and what could be its future. As you all know, Lebanon has been faces multiple crises in the last 10 years: political crisis, economical crisis, social crisis, moral crisis, war at borders, something that resonates particularly to us lately. And those crises were not ended, extremely complex, quite unique in the world, huge inflation, huge devaluation, huge economical slowdown, and all of this had a strong impact, obviously, on the life of the macro entrepreneur and ultimately into the financial sector and the microfinance institution. So what we will discuss with our panelists today is how the client has been impacted, what were the reasons of this crisis, how the client has been impacted, how the microfinance institution were impacted, or the investor, the responsible and social investor that were financing the sector in Lebanon were impacted. What is the situation today, and what is the future? If there is a future, what is the future of the microfinance sector in Lebanon, and what could be the key milestone for the sector to rebuild itself and develop? I will straightforward move the floor to Nadine. I think Anne-Sophie already introduced our 3 panelists. They know super well the sector. Nadine and Youssef being already involved for decades, almost, if not more, in the situation. And Bruno, as an impact investor, been active as well in Lebanon and the Middle East for a long time. So Nadine, I leave the floor to you. I think it could be good for our audience that is not necessarily very familiar with the country and the microfinance sector in Lebanon to give a flavor of what has happened and where we stand today.
Thank you, Sébastien, to the Club de Microfinance de Paris for having me on this webinar. So I'm going to start by answering your question, Sébastien, and give you a bit of an overview of where Lebanon stands, just to set a little bit the context, and then just try to explain a little bit what the impact of the multiple crises have been on the borrowers of the microfinance institutions, leveraging the research that we have done throughout 2020. So let me start. I think I'm sharing my screen. Yes, and everything seems to be working. So just allow me to remind everyone just the fundamentals on the macroeconomic side. It all started with the twin deficits, as we have come to call them. The fiscal deficit, on the one hand, you can see here, it's been widening as percentage of GDP across the years. And the balance of payment deficit, which you can see on the chart on the right. The two combined, along with diminishing inflow of funds, notably of foreign exchange reserves, have led to an economic slowdown that has started, I think, probably around 2018 or so. At least there was the impact that was already being felt by the microfinance institution, a bit of a slowdown. It peaked in 2019 with a tax on WhatsApp that was put forward that literally lit the streets. Very shortly afterward happened something that had never ever happened in the country, including during the civil war, which is the banks closing for about 2 weeks, which started a panic and a run on banks. So where do we stand today? Very rapidly, things started deteriorating, and the exchange rate that had been pegged started having a black market and a life on its own. There has been a number of interferences from the policymakers trying to regulate that black market exchange rate. It didn't really work out. You can see the chart, it stops as of 2021. We had 3 exchange rates back then. Today we have to deal with 5 of them. And so life has become a bit complicated. In the early days, you had various websites, apps, etc., trying to put forward the exchange rate. You see on the right a Telegram app, for instance. So that has continued up until recently. There was a platform introduced by the Central Bank of Lebanon to try and bring all of the volumes under control. We still have today multiple rates that are applied to different transactions and to different financial instruments. So 2.5 years practically into the crisis, the actual situation is quite harsh. The figures that you see here are extracted from the Lebanon Economic Monitor, which is a publication on the economic situation that my colleagues from the World Bank produce every 6 months or so. So very sharp contraction in the GDP, as you see, 2019, 2020, 2021. And on the right side, the inflation that pretty much accompanies the depreciation of the Lebanese pound. So that would have merit a very quick and strong reaction in Lebanon. And so I mentioned the Lebanon Economic Monitors. It's quite impressive to see it across the years. First one is called the deliberate depression because something could have been done but was not done. Later, it was demonstrated that Lebanon was going down the drain practically to the worst crisis for the past 150 years. Especially in peacetime, the level of destruction in terms of economic output that we're seeing is only matched in situations of war. And the last one is called the Great Denial, because despite all of this, despite knowing what was happening, knowing what needs to be done, actually nothing has happened. And so that's just important to set the context. And so let me just tell you, what it means. So what it means, if you have a bit of a sense of a humor, this is the sort of jokes that were shared in the summer, actually, when the price of fuel was rising. So the first one just says, it's impossible for the fuel price to go above 99,000 because that's just no to add 0. So I think that might have been abstract back then, but today with the Ukraine situation, and I think globally witnessing an increase in fuel price, just imagine that instead of increasing by 10%, the fuel price has increased by about 20 times, which is what has happened in Lebanon. So that's if you have a sense of humor, but in effect, it means that since the salaries have remained in Lebanese pound, your purchasing power has dramatically decreased. So you can see here, that's just a medicine that you used to buy at 9,000, now bought at 58,000. And that essentially means that if your salary has not increased, and that's the case for the majority of the people, and that's the case for those who still have a job, it's becoming increasingly difficult to move around, to light your fridge, and to take care of your health. And that's pretty much what we have saw in the study that is publicly available. I invite you to go and visit it. I'm just gonna share a bit of the highlights. We published it late 2020. We actually started the research when the economic crisis started, thinking that, well, let's understand what was going on. By the time we actually launched the study, the pandemic had started. So we said, okay, we're gonna study the pandemic and the economic crisis. We had 2 waves of surveys. The second one happened in August 2020, shortly after the blast. So we also studied the impact of the blast, and we really thought we should wrap up the survey so that we could publish the results without anything happening anymore in the country or in the world. And so the results were tough. 80% of the microfinance borrowers had lost purchasing power. That was a reality that we were living that I just explained. But what was even tougher, especially for those of us who work in this field, who have spent years running around the world, sharing good practices, etc., with the idea of supporting some local economic development and people eventually being more resilient, capturing opportunities, seeing a figure like 40% of, let me remind the big figure, 150,000 clients. So 150,000 households, roughly 10% of the Lebanese population, no longer able to afford basic needs. The lady that you're seeing here is somebody whom we interviewed. I was supervising the call, and I actually had her over the phone. Literally could no longer afford meat. And so she lives in the Bekaa Valley. She's been a successful entrepreneur. She had the second hand clothing store. She had grew her loan from around $500 over the years to $5,000. So quite a good entrepreneur by microfinance standards. When the crisis hit and that the exchange rate started deteriorating, she sold her stock at the actual price that she had bought it at, just because that's the ethical thing to do. Obviously, once you do that, you can no longer restock, because if you need to purchase a new stock, you have sold at about 10% of its actual new price. Well, your activity kind of stops. And that's very close to what the microfinance institutions themselves have experienced, because their portfolio, in a way or another, was also pegged to the dollar. They had around $220 million in portfolio that was reimbursed at the officially pegged rate. So in effect, probably is worth today around $20 million. And so, as I mentioned, she had to cut on meat, she had to cut on heating, and she was starting to sell some of her assets. She still owned her house, which was the case of 75% of the people we interviewed, which I think is one of the big differentiator between the Lebanese and the Syrians, who show similar poverty profile, but do not actually own fixed assets like the Lebanese. The silver lining, or I'd say the golden lining, and because there is one, is that 93% of the borrowers were actually satisfied with their microfinance institution. And that is in the context of a dramatic banking crisis, where I think if you would run a survey today across Lebanon, whether through banked individuals or unbanked individuals, the banked number was around 58% as per the Central Bank of Lebanon's latest survey. I think everybody would tell you that they actually are very, very, very dissatisfied. That's if they want to remain polite with their banks. And so this really speaks to the excellence of the microfinance institutions, to the very close ties that they have built in across the years with their communities. And so what has happened since is that we really made a lot of effort to try and support the sector This effort is still ongoing, but the major hit was really due to the FX rate and this massive depreciation of the value of the loans on the asset side. And I'll stop here from my side and leave it to Yusuf to share a bit more of the actual pains of dealing with an MFI in such context. Happy to answer any questions. Sebastian, you tell me if it's now or later.
Thank you, Nadine. I suggest we could make a quick roundtable with Yusuf and Bruno to give their feedback and then take some questions. Maybe Yusuf, you are the CEO of Majmoua, a long existing leading microfinance institution. You founded this organization, what, 30 years ago now? Even more maybe. Majmoua was a model in Lebanon, but also in the Middle East, in the world. Your clients were very loyal. The portfolio at risk was pretty low, inexistent almost. I did a couple of times the due diligence of the organization at Responsibility, at Symbiotics, where I was there as CIO, and Majmoua was qualifying as one of the best MFI we're financing. So what is the situation today? What was the impact you had? What was the impact on the clients? And yeah, give us a bit of on the field feedback after the presentation of Nadine.
Okay, sure. Thank you, Sebastian. And following on Nadine's introduction, it sets the stage for what could unfold, what could ultimately be really not a very nice story. The context is extremely harsh, like she said, and I will try to at least cover how we reacted and what we were able to do and not do over the last couple of years. But it has been, to put it mildly, a very, very difficult situation. So just a bit of context about who Majmoua is, just this one slide to tell you that, like you said, we've been around for more than 25 years. As of September 2019, we were clearly the leading in terms of scale and size, MFI in Lebanon. We had about 90,000 clients, 58% of them were women. We had an outstanding portfolio in the market of about 100 million USD, with a portfolio at risk more than 30 days, less than 1%. The total assets were 121 million, an equity of 67 something million dollars, and the liability of 53 or 54 million dollars. We had 500 staff working from 30 field officers across the country. We served practically every geographical area in the country. And on top of all this, we also had a very active non-financial services department that was delivering a training curriculum ranging all the way from simple bookkeeping and accounting rudiments to starting macro entrepreneur women, all the way to helping and mentoring people who were in need of helping developing a business plan for their business. And I jump quickly to a dramatic picture, to show you what the previous 20 years had been and what has happened literally in the last 2 years. The destruction of assets has been nothing short of phenomenal. The line may be not very clear, but if you follow that line, the green one, which indicates assets, you get a sense of how things were. And this is only from 2004. You can see the growth of the institution, both in terms of assets and in terms of client base. We were heading to achieve in 2020, 100,000 clients. That was the business plan goal for Majmoua. And then the crisis has sort of reset the clock 20 years back. As you can see, the first period, the whole beginning, we were at a pegged rate, a fixed exchange rate to the dollar of 1,500. This has been the cornerstone of the government financial and monetary policy for the last 20 years in Lebanon. It was considered to be the cornerstone of stability, which allowed us actually to lend in dollars, to borrow in dollars, to repay our lenders and our investors in dollars, without any headache over the previous 15 years. And in a sense, that kind of lulled us into a full sense of security. I think the signs maybe were pretty clear by mid of 2019. But nevertheless, we were caught by surprise in the sense that the speed with which the situation deteriorated was beyond even our imagination. You could imagine, I mean, here we are at the eve of such a crisis with 90,000 clients and $100 some million in assets, of which 67% were in equity. We felt pretty confident. I admit I was pretty, not comfortable, but confident that we'll overcome the crisis, that once this happens, well, the playbook elsewhere would indicate that there is a new government would resign, a new government will come in, the peg will be removed, there will be a formal devaluation, and will be set on a new or floating exchange rate and whatnot. So we'll take a hit. I figured ahead, what, $10, $20 million? Okay, we can swallow this. I mean, at the end of the day, we're an institution with a social mission. We're not for profit. So at the end of the day, and we'll be able to stand by our clients. However, I have to say, nothing of what happened actually prepared us for this, because literally nothing. First, the government took 3-4 months to come into being after. There was no formal devaluation. The peg was kept, strangely, at 1,500, even though the parallel market rate was floating and steadily going up, you know, from 1,500 to 2,000 to 3,000. And by the end of the first year, it was already at 8,200. And by the end of the second year, as you see, the exchange rate was already at 25,000. And believe it or not, during this, like Nadine just mentioned, there was absolutely nothing being done, either politically or economically or financially, to try to redress the situation. So that complete cop-out and the shirking of their responsibilities as a political class is something which is quite mind-boggling. So we were left to fend on our own, to defend and find what ways we could manage that crisis. I will not take too long to tell you through everything we went through, but let me just maybe quickly here with this graph show you where we were before the crisis. The graph begins in September 2019. At the time, and before that, we were disbursing at the rate of anything between 8,000 and 10,000 loans per month. That was our coasting speed. And here, as you can see, as a limit is 7,000, and you can see how that the number of disbursement have gone down with the beginning of the crisis. Hardly, we had a couple of months to start to adapt and fix one big change we did at the very beginning, since we could no longer lend in USD and there were no more US dollars in the market. We had to switch to Lebanese pound lending. So we quickly put this together within a couple of months, and we launched a Lebanese pound loan product. But hardly had we begun that COVID came in. And as you can see, you have a couple of months where there was absolutely no activity. We launched an effort to do a redenomination. And that again comes to the fact that that crisis was completely unexpected. We expected, for example, by now, when we started the redenomination, we were into 6-7 months into the crisis. And to everyone who looked at it said, this is abnormal, something has to give. There will be a formal devaluation, there will be a formal program, there will be an unpegging. So we went ahead and redenominated with slightly, instead of 1,500 at 2,800 to the dollar. And this is why you have this big spike in people redenominating their loans from USD, but not everyone accepted this. And by the way, this also got us in trouble because the peg is still alive today, meaning that legally our clients can still pay us at the rate of 1,500. Even though the parallel rate is around 22,000 today, people who still have outstanding loans in USD are paying us at the rate of 1,500. So you can see where the destruction of value has happened and how our equity has evaporated over the last couple of years. as soon as the redenomination effort was conducted, there was the port blast in Beirut, which again reset the clock. The government resigned, and we stayed actually from this date on, August 2020, for 14 months without a government because there was a political gridlock and they couldn't agree on who should be a prime minister and what the activities would be. So we dragged along all this period with absolutely no guidance or no roadmap in terms of economic recovery within the country. So we were again left to fend on our own. And then as expected, as the country started going more and more bankrupt and the central bank started losing more and more of its reserve, they could no longer subsidize gasoline, the purchase of electricity and medicine and whatnot. And one of the results is, as you see, by August and September in the summer of 2021, we were without power and without fuel. So we had queues of cars at the petrol station, and we were down to 1 or 2 hours of electricity per day. And the prices of gas and fuel went through the roof. It was multiplied 5 times over. So that makes any operating within this environment an extremely large headache. Why so? Because one thing we tried to do throughout, obviously, from the beginning of the crisis, we tried to maintain our human capital as much as we can. We tried to preserve all the accumulated skills and know-how that we have built painstakingly over 20 years, hoping that as soon as the crisis is over, we can hit the ground running and we could have still a team that could go out and reach 100,000 clients in no time. But that position became untenable as the crisis deepened, no solution in sight, and our inability to continue to pay wages and to pay operating costs. So we did, this is another big thing that we had to do. We had big waves of layoffs so we can adjust to the crisis, but the impact, unfortunately, is not seen on the bottom line. Part of it is because our operating costs kept going through the roof. So we're now down to about 50% of our size. We started before the crisis with a staff of 500. Today, we're slightly below 250. And yet, with all the savings and salaries and cuts and whatnot, we still have an operating cost that is going through the roof because the cost of power, the cost of fuel, the cost of rent, and all the other costs have been multiplied by an order of magnitude. So where are we today, and where are we heading? It's a difficult question to answer, if only because what we expected to happen did not happen. Even when we thought there will be a point where there will be some sense into this political class to do something and start redressing the economy, it's still not happening. So for the time being, we're here struggling with 5 exchange rate, like Nadine has said, literally 5 exchange rate in the market. We're unable to receive any fresh funds in dollars. Our money in the bank has become, has been taken over completely by the banks. We have no access to our money. First, we had no access to our dollars that remain locked in the bank and we cannot access them. Now, just to make things worse, we have no longer access to our Lebanese pound. Remember I said when the crisis happened, we started accepting repayment in Lebanese pound instead of dollars at the rate of 1,500. So we did accumulate a few billion of Lebanese pounds. But today, for example, they're hostage in the bank. We're unable to access them and we cannot issue any additional loan because it is, for reasons that escape me, we have no understanding of why the monetary policy is functioning this way and why we are unable to access, or why the banks refuse to release our money from the bank. The only thing that we see today happening is we're moving more and more into a cash economy. be it in USD or be it in Lebanese pound. You cannot buy a single good or acquire a single service without paying for it in cash. And with a significant amount of our capital being locked up in the bank vaults, we have no way of to continue operating. And every week in the last months has been an increasing headache for us in that sense. So I will stop here. I'll be happy. I mean, obviously there's plenty I could say more, but I'll leave it for a question period, and I'll be happy to address any issue the audience would want to pursue.
Thank you, Youssef. I already have some questions, but we'll move to Bruno. So Bruno, Inpulse is a long existing social responsible investor, and you have been active in Lebanon for many years, as for instance, Grameen, Crédit Agricole, or CD are also. So how have you reacted toward the crisis? What could do an impact investor? What could you do in such a situation? How could you combine a social responsible attitude while as well you should be in capacity to repay your investor? So tell us a bit how have you cope with such a challenging situation on your side?
It was indeed a very, very challenging situation, and it is unfortunately always very challenging. It is more challenging, as you have heard, for Youssef, his team, and all the microfinance sector on the field. Somehow we were living that with some kind of a distance, which sometimes doesn't help either. To take maybe always the quickest and more adapted measures. Well, I had a presentation, but because you are focusing and raising directly this question of how we reacted, I think in time of crisis, when you are an impact investor, what matters is really the fact that you can quickly adapt yourself to the situation of your partners locally, that you can maintain the support and even, if possible, increase, enlarge the room of maneuver for them to operate, to provide eventually technical assistance or quick delivery that helps them to assess and readapt a strategy. And especially in the case of Majmoua, where you have quite many lenders together, it is important indeed to ensure a proper coordination between all of those lenders and make sure that they all focus on the same target, which is to help to support the microfinance institution. So that's what in times of crisis should happen in a perfect world, if I would say so. In case of Lebanon, because the crisis, the layers of the crisis came one on top of another quite rapidly, because, as Youssef mentioned, there was immense uncertainty and very difficult visibility how and what kind of measures will be taken by the different levels of authorities, whether the government, but I would also include the bank into that. I think it's worth mentioning that the capital control is unofficial capital control and was decided on the initiative of the banks themselves. We were ourselves quite lucky in a way to have open on time a bank account in Lebanon. One could think, okay, then we could have organized this, but we could somehow be privileged in terms of lender compared to all our colleagues. But clearly the intention was not to take money out of the institution. So very rapidly we initiated discussions in terms of moratorium. just to make sure that the money stays in the microfinance institution and that all lenders are treated equally. And I would also like to refer to the fact that there is a pledge document between all investors, impact investors certainly, but also I would say mainstream investors, of course more focusing on the COVID crisis, but which is also valid for any type of crisis, that states how truly the investors should behave in this kind of situation. And this is a process that I have to say took a very long time, and I'm not really proud of that, especially in the case of Majmoua, because it was a difficult process between all the lenders to come to this stage. But again, I think we have to look more at the results and not too much look backwards. I think now we are getting to that 2 years after the beginning of the crisis. And the idea is really to get to this situation where Majmoua is supported in all the very difficult decisions they have to take, and they have already taken. We decided to work with Majmoua for many different reasons. We want Majmoua to go through this crisis and to survive. We want indeed to make sure that the social dedication that is so unique for a microfinance institution to remain as an example. Youssef mentioned that there was social dedication to the clients. I would like also to mention and to underline the fact that the institution really did the utmost and is still doing the utmost to maintain the quality of life of its own staff. These are issues that we have to consider when we are in this kind of situation. And of course, I mean, Youssef and his team are the best persons to assess what can be done and what should be done. Definitely, because you will certainly raise that question, what should be done to get out of this. The best would be to bring new cash, definitely, in the sector and to empower, to make testify or trust in those microfinance institutions that in the past did extremely well. That is difficult today, even for us as an impact investor, for many reasons. Internal reasons, but also as explained, because the banking sector simply is not a partner and it is blocking basically every attempt also to use, even if you would transfer some fresh USD to the country, it's not quite sure, and we just heard that it would be possible for Majmoua to use it for lending purpose. So that is something, yes, we have to think, and I see as a big obstacle. I see mobilization on government level, some European governments, on the World Bank level, on investor level to bring new cash. There are new instruments, but in size it remains very small compared to the needs. But we all know that the main obstacle for a brighter future to microfinance sector in Lebanon are the Lebanese authorities and their incapacity to agree with the IMF on a plan of measures that would simply allow the country to redevelop. So these are the elements. It is not an easy answer because it doesn't bring really much new outlook to the country. But nevertheless, we believe that every little helps. And even if we are talking about small amounts or a small margin of maneuver, if it may help the microfinance sector to keep alive for a few months, for even more, hopefully, we should do it, because this is really a duty somehow. And so this is also what we are trying to explain to our own investors, because we have a duty also to them. It's not always very easy to explain, again, because there is a distance. They don't live in the country. But the best we can, we also pass on this message to make basically everyone patient and trust Al Majmoua and the other MFIs and the whole microfinance network with at least that capital of trust that is needed, and hopefully also with some fresh money in order for them to go over through the crisis.
Thank you, Bruno, for this very interesting feedback about how you have dealt with quite a unique crisis, and it could be of interest for a later question to compare it with some other crises that happened in microfinance in the past. Maybe Nadine, on your side, what is your view about the future of the sector? How do you see the conditions for a new start? What has been the reaction of the donor on the development finance institution? You work for one of them, the World Bank. Why have they not invested more or donated more to help the sector? What could be for them the condition to start being more active somehow?
Good question. And for those of you who are listening to me, I mean, I'm connected twice, so if you want to see me as well, I think there's another small window with my face on it. The why has not anything more been done? The question is relatively simple. It's because a lot had been done in the past in exchange of reforms that actually never materialized. So the entire donor community at this stage has a very clear stance of saying no more money if there's no reforms first. And obviously that message it takes time to simmer in, unfortunately. I mean, I think the best thing I could do is show those 3 reports from my colleagues from the World Bank. I mean, I'm part of the group, but it's not often that the World Bank as an institution puts forward messages that are so tough for the client. I mean, that's how the countries are called. They are clients because at the end of the day, they borrow and the bank is a bank at the end of the day. But those messages have been very tough, but they have not been listened to. And this is from the international community. There has been messages from the citizens as well. I don't think they have been listened to either. At least we're not seeing anything tangible happen. And this is what Yusuf was saying is quite mind-boggling, because you just cannot imagine. History has never shown, and we're actually making history practically as we live day by day. We have never seen anything that resembles the Lebanese situation. I think this will be in the school books. We are actually in the World Development Report of 2022 with the box on Lebanon, because the situation is so unique that it had to start to be somewhere. I think we're already in some school books for the port explosion at least, but I think for the financial crisis, we'll definitely end up in school books. So that's the answer. Second, when the Beirut port blast happened, that did generate a lot of support from the international community. It was all for humanitarian purposes. And so we fought really hard with some colleagues to set up a small program that would support a little bit the microfinance institution. That's literally to, extend their lifetime by like 6 or 12 months maximum. And that's the only thing we were able to do, again, because the money is here to help people live. We have practically half of the population that is poor today. Some reports go up to 80%, depending on which sort of poverty you look at. And so people just struggle to eat. I mean, I've heard it myself from this lady whose picture I've shown. I mean, she had not eaten meat for 2 months when I spoke with her. She was literally eating tomatoes and onions. I mean, that's tough. And so when you go speak with the donors, they're like, well, let's feed people first. We're down to 1 hour of electricity a day. That is still ongoing today. And so, no energy, no development. The whole focus is just, feed people until there is reform, and that investors and that the donor community can come back in with development-oriented projects.
Thank you, Nadine. Youssef, what is your view about those perspectives? Do you still see some demand coming from the clients? What kind of product? I mean, who in such a situation may want to engage into repaying a loan, to borrow, to develop an activity, to repay a loan?
No, that's a very relevant question, Sebastian. First, demand has dried up, certainly. I think we've seen it fairly quickly. Our numbers dwindled from the 90,000 on the eve of the crisis. Today, we're struggling to keep around 40,000 clients. So we're less than half in less than 2 years. And the reasons are multiple. One, like the study of the CGAP has shown, 40% fallen under extreme poverty. So they're no longer microfinance client. They moved from being small entrepreneur who could borrow $1,000, invest it in their business, generate enough income to pay it back, and live with their family, into people who are asking us for food subsidies, if we can give them direction to an NGO that could help them put food on the table. So these are no longer today clients. The others are obviously reluctant. Most of our top-notch clients, people we classify as A+, whom we went after if they're interested in loans, are no longer interested, or at least due to the volatility of the economic situation, tell you, I'd rather wait. This is not the moment now to borrow and get myself in a lot of debt. And we're facing two other major issues with that. One, we started lending in Lebanese pound, but as you've seen, the Lebanese pound has lost value over 90% over the last couple of years. And lending in Lebanese pound is a money-losing proposition today. So we know we're lending, and we know we're losing money on this, but we continue doing it to stand by our clients. But what interest rate can you charge on a currency that is devalued 100% in a year? Do you tell the client, pay me 200% interest rate so you can preserve the value? It's not going to happen. So we kept lending in Lebanese pound, partly because we're convinced we need to stand by our clients, the few who want to borrow and need to do some sort of cash smoothing function in their financial situation. And two, because we believe it is better than leave it in the bank. You leave the money in the bank, it's going to lose value anyway. It's not like you can sit tight, because it's not preserving its value as an asset in Lebanese pound. So we continue lending. But today, like I was mentioning earlier, we have no longer access to this money. So even though we want to continue lending, just today we had a client who had 30 million Lebanese pound, and he couldn't cash it. He couldn't go into an agent and get the cash out, because we're also short on now cash bills in Lebanese pound. Last but not least, one venue we know is going to be one of the most serious way to recover our financial health is to lend in dollars again. Plenty of signs in the local economy indicates that as people have lost confidence in the Lebanese pound and as a tool, people are reverting back to using dollars, but dollars only as cash bills. But the downside of this is, as long as the central government keeps the peg at 1,500, I have no legal recourse to ask the client who borrows from me in dollars to pay me back in dollars. So we could we could give someone $500 or $1,000 loans, and there is no guarantee that 2 or 3 months down the line, the client would say, you know what, legally, I can pay you at 1,500. This is what the central bank says is the official peg. Here, I owe you $1.5 million, which technically is less than $20. So we're reluctant to do this. I mean, we're thinking about this because we do realize that this is the only way to generate significant income to keep us operating properly. But we're hesitant to do it because there is no legal framework which would allow us to lend in a foreign currency and recover in a foreign currency.
Mm-hmm. And you, Nadine or Bruno, from your perspective, what could be, should the law allow that? What could be then the possibility to have a index loan in dollar or lending in dollar? What is this something you will support, that you will think as an interesting option, or you will consider that the crisis was linked partly to this correlation between the Lebanese pound and the dollar in terms of asset and liability management, and the devaluation that organizations should keep lending in local currency? What is your view regarding the option that you say are the only one, according to it, that could work?
Yeah, definitely. I mean, again, I would say there's very specific context of Lebanon with those 5 different FX rates doesn't help because, well, but I do believe that if Al-Majmoua could receive new money, what I would call fresh money, and inject this into the circle of giving loans. My question to yourself would be, to what extent is it possible to avoid as much as possible the banking sector? Because I understand that they are not helping, they are not supporting. And I assume one of those reasons is that the twin deficits that was mentioned by Nadine at the beginning resulted in a huge amount of financial loss, which has to be shared between the state, the central bank, the banks themselves, and their clients. And the banks are actually keeping as much as they can in anticipation of what would be the share of who is going to share what part of the effort. Because obviously they want to reduce their share and rather have their clients pay for it. So for that reason, I have the feeling that sending new money into Lebanon and have Al-Majmoua use this money and disperse and get the money back and so on could work under the condition that basically we can do without the banks. But is that feasible?
It's I would hesitate, I mean, to give you a definitive yes. I mean, because it will work until it doesn't. And this is what has been happening. I mean, there could, today, when we receive, if you send me $1,000 from outside, it will, technically, the bank will give me $1,000 in cash bills, no questions asked. But given how they behaved before and how they unilaterally decided that we have no more access to our dollars in our banks, when will this stop is anyone's guess. If the situation continues to deteriorate, maybe your first 2 installation of $1,000 I would get a hold of them, but the third one, the bank would tell me, you know what, we'll give you 500, you need to keep 500 in the bank. We'll discuss what happens with this 500 in 6 months. So yes, I mean, today we're facing a banking sector that has lost absolutely all credibility. And people avoid. I mean, I could speak on a personal level, I would avoid. I mean, I wouldn't put a penny in a bank today in Lebanon. I'd rather keep it at home. I'd rather keep it under the mattress, keep it anywhere. But because like this, I could put it and today they could release it, and in 2 days' time, for whatever reason, they could say. And the absurdity of our situation is that everything has been happening this way. I mean, there is no legal basis for most of the things that we see. Like you pointed out, Bruno, the banks unilaterally decided we cannot take out our dollars out of the bank. There was no capital control law voted by Parliament. This is one of the things, for example, we expected. When I began I said none of the things we expected happened. This is one of them. I mean, we thought that the first logical thing a country would do when you fall into a crisis like this, they'll pass a capital control law. Here we are 2 years later, there is no capital control law, but yet banks themselves have decided they will impose their own capital control. So they can decide who can take money out and who has no right to take money out. Obviously, Al-Majmoua is one of those who is not allowed to take their money out.
I can tell you Nadine is also one of those who cannot take their money out. But no, but just to, I mean, I see two ways forward, literally. What Bruno said is right. Banks are just waiting to see who's gonna, pay for the losses. One scenario is that nothing happens and it takes about 10 years. We've already seen on the chart, and that hurts really. When I see those charts, when I saw the results of the study, it was really tough. You see Majmoua's charts. I mean, Yusuf can go back 15 years in time and start again. That can be done. Now you do it in cash, yes, and you do it with the whole cash logistics in vaults. So, you create branches and you put physical cash in it, and it's in dollars and it can be stolen anytime, because if people start knowing that there's a lot of cash here, well, then, they start eventually stealing. So you eventually need the banks, but not to give you, your money digitally, but to give you a safe that is guarded well enough. And that obviously has just logistical limitations. So we'll not get Majmoua to grow again as fast as it was growing. The other option is to go digital, but Yusuf pointed rightly that there's a question of trust. So you need to go digital, and you need to go digital without any Lebanese bank, because nobody's going to trust a Lebanese bank. And that requires somebody to, put some sort of a legal framework that allows this to happen. I think at a small scale, on the short run, Majmoua, if there's somebody who's willing to put in some funds to try it out, could demonstrate that there is a business case. How you scale such business case, I mean, that's going to be a big question mark if there is no stabilization at the macroeconomic level.
Thank you for this feedback. There was one question from Tina. For the other, feel free also to ask some questions through the chat about what is the situation, the particular situation of the farmers. Have they been affected like shopkeepers on urban place, or Youssef, you have in your portfolio several farmers. Could you comment a bit of the specific situation, and isn't it possible for the future as well to lend to them with credit campaign or contract farming?
No, we are considering this. First off, obviously we lend to all segments from pre-crisis. So, and I think they were all universally affected. That it hasn't been one sector that hasn't been negatively impacted by the fact that the money has been devalued and the country is in deep crisis. As I mean, everyone had to adjust when your purchasing power is reduced by so much. There are so many adjustments that you introduce in your personal life and your economic life that has to follow through. Having said that, we've been also looking carefully as part of our survival strategy at what segments have fared better than others, and which segments can we continue to serve more reasonably, and which ones would be much more affected. Farmers would be one of them, would be the one of the sectors we've been looking at and investigating more closely whether they'd be interested in taking loans or seeking help today, because we do think in the current context they will fare better than others. I think farmers are having another opportunity. This is a country that has ignored or treated agriculture with benign neglect for the last 30 years. Today, I think, is a return of that boom, and then that more looking into how agriculture and farmers could become again a more important part of the economy. So yes, the short answer is we used to lend to farmers. We continue to lend to farmers. We'll be interested if There are specific niches in this segment of farmers who are in need of financing. The trick remains, how do we make it in a way in which is financially sustainable? At this point, lending in Lebanese pound, as I said, will continue to be a money-losing proposition. And there is nothing we can do to change that. So the alternative is to start lending in dollars. And then can we not? Will we be able to sign a contract with the farmer in which he or she commits to pay us back in USD? Today, legally, it is not 100% solid, nor certain. So that it is the currency of the lending that no longer works today. I mean, our model is no longer functional.
Thank you for this feedback. Another crisis is nowadays on the news in Ukraine, and we'd be interested to hear your view globally, I would say, from all of you, about what could it has as an impact at the microfinance sector worldwide, but more particularly in Lebanon. Lebanon has been exposed to the Syrian war and to also the port explosion. So as you pointed out, both Nadine and Youssef, not only it has its own economical shock, but then some political instability on war in Syria created also a lot of impact. Do you foresee some possible impact on the country, on the financial sector, on the microfinance sector, because of the rise of price of oil, price of wheat, political instability in Eastern Europe? So what is your current assessment of the situation?
It comes back quickly. The quick answer is yes, there will be certainly an impact, and on more than one level. The rising of commodity prices is already being felt everywhere. I read somewhere that 90% of the wheat import of Lebanon is from Ukraine. So if this stops, we can imagine that, again, we're going to go through another mini crisis of bread availability in the country and whatnot. But of a much more direct impact on us, for example, literally a week ago, 2 weeks ago, we had finalized a new transportation scheme for our loan officers on the field, because the gasoline prices has been multiplied by a factor of 5, right? And we were finding ways in which we can pay again a fair reimbursement to the loan officer for using their car to do trips to clients, and at the same time try to maintain our overall cost reasonable. I mean, hardly had we finalized that formula for paying back that the Ukraine war has shifted the prices up of gasoline, and today again we're already 30% higher at the gas pump. So which means that all the scheme we had developed a couple of weeks ago to compensate our loan officers for gasoline purchase will have to be revised upward, which again comes back to that my original point, that no matter what cuts we do in operating costs, changes in our environment and the purchasing of goods and services is forcing us again to increase our operating cost again, making once more our model untenable financially.
Yeah, I would like to just emphasize the point that, you know, when you take a look at the typical OPEX of a microfinance institution today, what has the biggest bulk used to be staff costs, because it's a high touch sort of model. And today staff cost has become super cheap in Lebanon, because the cost of just getting electricity, we tend to forget. But a microfinance institution, it's a database. A database sits on a computer is connected to the internet and needs electricity to work. So if you need that to work, you need to pay electricity. In a country where you only have 1 hour of electricity, you're paying fuel and eventually a generator to get the electricity you need just to keep your operations running. You need to pay for the fuel for your loan officers to move around and go see clients. And those costs today are much bigger than the cost of, you know, a human being, because the wages have been devalued to an extent that they're practically no longer living wages. And I think, you know, the big fight for us, at least an international community, and for me speaking, you know, in my CGAP capacity for having helped built those institutions over the past 20 years, it is very important to preserve the human capacity, because this is what will, kick the institution back again.
Yes, I cannot stress that more than Nadine has just said. I mean, let me point out, most of our staff have been living for the last 2 years with anywhere between 80 and 90% pay cut in salary. And I think it's admirable in terms of loyalty and commitment and belief in in Al Majmoua, that they have continued to be with us. But today it's becoming more and more difficult, and we're already losing skilled at middle level managerial people at Majmoua, because they're attracted. I mean, they stayed the course as long as they could, but then they say at the end of the day, we need to think of our families, we need to think of our kids, and if there is an opportunity somewhere where I can get a salary which is higher than what I'm getting here, I'll take it. And we're already seeing that drain happening. And once we start losing that skilled and key people in the institution, it will be very hard then to rebuild. Whatever needs to be rebuilt is going to be significantly more difficult in the coming years.
Bruno, on your side, I mean, it's possibly a bit too early, but do you see some concern for European investors about emerging markets and that the Ukrainian-Russian crisis trigger more difficulty to fundraise, or that the donor attention could be more related to welcoming refugees in Ukraine, to finance other activity, and that in already a scarce environment for finding grants and support for microfinance in Lebanon, that also there could be a shift of priority combined with more frilosity, more reluctance from mainstream investor to go in emerging markets. What is your feeling at this stage? Again, it's very early to say, but have you received some signal already?
I haven't yet received signals. We anticipated. The first thing we did within 24 hours of the war declaration, or when everything started, we informed, I would say, all our investors, whatever be the fund, because we are also directly exposed to Central and Eastern Europe, fortunately not to Ukraine, but we are also definitely also exposed to all the MENA region, and we wanted to inform them that we shouldn't have all the focus on this, because the consequences could be much larger than expected. And you just simply mentioned the part of Ukraine in the wheat imports for Lebanon, but this is also true for Tunisia, for Morocco. There is a high dependence, and in a country or in a region where there are already many problems, if people are starving, you know easily that it can develop into some kind of revolutions, or it could extend into more conflict. So we had to inform, I would say, definitely all the investors, because it's always better for an investor to be warned than just to discover afterwards what the situation is. But nowadays, it's still much too early to see exactly what will be the impact. And we should also prevent the case where the war in Ukraine and all the spillover effects put a shadow on the other existing crises. And so this is something that somehow we try as much as possible also, is to keep let's say the attention of what is also going on in other regions, and especially in Lebanon. At least in the case of Impulse CoopMed, with our shareholders, I mean with the shareholders of both Impulse and CoopMed, because it happens that they are similar. we raised the attention. We wrote to authorities. We wrote to the French government. We wrote to our DFI partners to say it's not the moment to be less attentive of what is going on, also in the MENA region and in Lebanon in particular. This is the least we can do. Hopefully we will be heard and there will be something coming out of these actions, but very committed shareholders can do that, and I can assure you that they are really behind us, and because they want to support both COPMED and the COPMED clients. And indeed, we will see what and how everything will much depends how quickly we'll see a little bit clearer how things are going to be in Ukraine. But definitely, I mean, the prospects are not very positive, I have to say, because for the first time, also our populations, ourselves, are going to be hit directly. We are going to pay a price for that. The energy price, some kind of food security is also to be considered, also at our level. So from that point, I hope it will help everyone understand what is now going on in Lebanon, because they are already hit totally by this kind of effects.
Surely a relationship that could be established at some stage. I don't know if the audience has some question. You could raise your hand. I don't think you could ask them orally, but feel free to write any question that you may have to a panelist.
If not, I would have one question to Youssef. During one of the, I would say, discussions we had at our board, one of our representatives said that in such kind of distressed situation, what could be a way out is to replace the money by some kind of barter-based economy. And I just wonder to what extent this could be something to think about in a situation like Lebanon.
I mean, we've always knew that this was somewhere in the background. I mean, we kind of talked about it jokingly in the country that we're heading into. But now that you're saying it this way, I don't know if we have to consider it.
It's not, I mean,
Yes.
as an introduction, as Sophie said, we are persons, we do not speak on behalf of our institutions. So
I don't know. I mean, I haven't seen it happening in any extensive way just yet. So is it the model going forward? To be honest, I cannot speak to that. I don't know if Nadine has a better take on this.
I mean, the reason why money was created was because barter was difficult to put in place at scale. Now, what you could see happening are things like leasing, right? Because that protects you from, people not repaying you, seize the assets. That said, we're in Lebanon, right? I remember a few years ago when there was I think a USAID program pushing some money into southern Jordan. The MFIs had a lot of difficulty to pay it back because people welcomed the loan officers with guns and said, hey, this is US money, let the US come and take it back. And so you might have things like that in Lebanon where you're like, I finance the asset, but the day where I come to seize the asset because you're not paying back, well, I'm welcomed with guns and I cannot seize the asset and the person is protected locally. And so, you have to double down on the skills of the MFIs to actually really carefully select the clients, etc. We have a question in the chat that's about, Okay, we have long questions in the chat, so maybe we should take that. So I'm thinking leasing is one, and going back to the ag is another one. I mean, we studied a few models. They were very tough to be made sustainable, but the idea is that you'd finance the inputs in exchange of a portion of the crops down the line. But there, you usually need to have storage units that come with it. And so going back to the question I think Tina answered, if you want to imagine something around, you know, a Majmoua financing the input instead of typically it used to be the whomever selling the input that's doing that, that could be possible, provided you have a whole chain that is in agreement and signs that Majmoua is getting a share of whatever is being sold afterwards. Can this work for Majmoua, for whomever is selling the inputs for the storage facility and for the farmer at a price that is sustainable? That's a tough question, to be honest, but it's definitely part of the things that need to be investigated in this market. So I'll leave it back to you, Sebastian, as I see some questions in the chat.
I mean, one of them is a bit referring to the subject that both Youssef and Bruno evoked, which is a crisis reflect mistrust in the banking sector? So it's clearly an opportunity on one angle for the microfinance institution, but there's also some cons. So where do you see is it more opportunity, more risk? What could be the
I see more opportunity, absolutely, and I see this as a pro. I think the distrust with banks is something we can capitalize on, and we can, pending we remain alive when the recovery begins. The problem is today we're struggling to keep our head above water. But once the situation stabilizes and economic recovery, I think no one is in a better position than the microfinance sector to fill that gap in terms of providing financial services and non-financial, in the case of Al Majmoua, to hundreds of thousands of people across the country. I mean, who else is better placed than that, and who has stood by them? I mean, we, for example, did not suffer from the negative perception that people have vis-a-vis banks. Quite the contrary. I think to this day, there are enough signs that the clients of microfinance stand by the institutions with whom they have worked. And the potential in the future is huge. I think in the first few years of the recovery, I mean, there are hundreds of thousands of people who will need some sort of access to finance that I think only the microfinance sector would be in a good position to offer. And this is why my plea is help that sector remain viable. Yes, it might be at the cost of a subsidy in operating costs today, but in my opinion, it's peanuts compared to what the outcome is going to be. I mean, the return on investment on this, from having an institution that can, the next day you begin working in earnest on the field, reach 50,000 clients, is very different than having a shriveled institution today that had to cut costs and reduce its size to 20 people, and it's going to take 15 years until it reaches another 50,000 clients. So, and the investment is compared to the billions of dollars that are going to be sunk in the country at some point when they finally sign a deal with the IMF and start the economic recovery, is peanuts compared to what all this is.
No, you raise a very valid point. And in my experience, unfortunately, we were barely able to find grants and subsidies to keep organization MFI that were coping with a decrease of their revenue and their portfolio, to keep them alive. It's a shame because, as you said perfectly right, it costs far more after to restart an organization and its staff and donors on DFI are simply not organized or are not strategically focusing on such kind of support. But you will say, Youssef, Nadine, how long could the sector survive? I mean, you have been experiencing the situation for 5 years. Some organization may have even the equity negative. So how long could you stay alive somehow if more, 1 year, 2 years?
I would say another year, another 16 to 18 months. Well, it depends on how much we're allowed to access our money in the bank. I mean, we have some money which we cannot control. I mean, look, it's not a joke. Today, for example, the way we used to disperse money, we would transfer money from our bank account into Western Union. And so we send the list of clients to Western Union, and they could go to a Western Union agent anywhere in the country and take out the money, right? So suddenly, 2 weeks ago, the banks and the Western Union said, no, we can no longer do transfer. Western Union said, the only way for us to disperse for you is to bring us cash. So billions and billions of Lebanese pound in cash. You go to the bank, they will not allow you to take cash out. So where do you get the cash? A secondary market has flourished in the gray market, in which you sell a check in Lebanese pound and somebody gives you Lebanese cash bills in return for a 15 or 16% commission. So you sign a check for $1 billion Lebanese pound, and someone will give you 850 million Lebanese pound, which we take to Western Union to disburse to our clients.
I like, Sebastian, how you shake your head.
Yeah,
but that's been our daily reality for the past 2 years and a half. So, you know, I have pushed. But just to say, I have pushed very hard to get an answer to this question of saying, you know, what can we expect in the future? I was notably working on a study that looks at potentially, you know, blended facility solutions for Lebanon, because I was already projecting myself in the future, saying, okay, this is temporary, it's going to pass, let's get ready to the future. The issue is that human behavior is tough to predict upfront, right? Yusuf said there's people who have been paid 1/10 of their salary. Just imagine yourselves, you know, getting 1/10 of your salary. For how long would you stay in your job when your costs are soaring, right? Like everything. Your electricity, just to keep your fridge on, has been multiplied by 10 or 20. How long would you stay? I mean, who would have said that, you know, you have 300 staff at Majmoua who agree to do that for 2 years and a half? That's unpredictable. If people are willing to work for free, it can stay. But yeah, at some point of time, what we have seen and what our study had already showed is that people were depleting their savings. So you sell your gold, you take your kids out of, you know, private school, you put them in a public school, you cut on your insurance. At some point of time, there's nothing to cut on anymore. You sell your house, and if you can, I mean, you eventually get on a boat and you leave, or you just look for another job, but there's not enough jobs for everybody. And I think this is where it would be a real strategic mistake from donors and the FIs not to support the sector, because then what? Then it costs a lot more, Yusuf said it, but then people have no other choice. And we tend to forget, but one of the big roles of microfinance institutions is to provide that second layer of a safety net at an affordable price for governments, for donors, for people who have some skills. They don't need to be on a formal safety net, but so that they can continue just feeding themselves and get going with their lives. And I think that's the thing that we're trying to pitch today to donors and to the global community.
But it's not easy. I try to talk to a couple, but first, as we said, they are usually not a bit reluctant to sponsor the operational cost of an organization that is experiencing a decrease of revenue. And secondly, the attention is elsewhere in terms of geography or in terms of sector. Clean energy, all is valid. But the couple to whom I talked lately were not spontaneously strongly interested to donate and help. Right, very makes sense. We are arriving at the end of the workshop. Thanks again for our panelists for the time you have spent here. Thanks particularly for those that have been involved on the field for a long time to develop the sector, to help micro entrepreneurs, and for keeping the sector alive the last year, trying to survive, to develop it. And let's hope the country will experience some stability, that the microeconomic sector could stabilize, and that both the financial sector and the microfinance sector could benefit from that. And in between, I think if all of us, we could try to look if some support could be given for fresh money, for sponsoring, for helping through blended finance vehicle or whatever, the sector to continue financing micro entrepreneurs, because we as we said, we see as well huge opportunity coming from the mistrust in the banking sector. So thanks to everyone and to the Club of Paris for organizing that. Have a good evening. In Paris or in
Thanks a lot to Philippe for doing the translation.
Thank you everyone for having us.
Thank you.
Thanks a whole lot.
Goodbye, Beirut. Goodbye, Paris.
Goodbye, Bruno.
Bye.
Sébastien, Philippe.
Sébastien, thanks a lot. Anne-Sophie aussi, merci. Bye.